I've been to Europe. I've been to London. We talked about the energy crisis before the war. We've talked about it since the war. You guys, like we are, getting really lucky with the weather as far as preserving your energy supplies. I wonder if that's helping the market, because if it's not, I'm not sure I have any rational reason, Seema, why the European markets and UK have been hotter than the US.
Yeah, look, thanks for having me on. It is certainly a very interesting dynamic that's going on. And I would really separate the UK and Euro area out slightly differently. So for the United Kingdom, as you said, look, it is considered to be the worst performing economic market in the G7 this year. It is expected to go into recession very soon and for it to stay in recession throughout 2023. So this makes it even more intriguing. But the reason that the UK has outperformed is because actually valuations have been very, very cheap. So it's very attractive. It also is offering one of the highest dividend yields globally. So for people who are worried about the equity market for this year, actually for a safe place, the UK, funnily enough, is actually becoming the place to go to. And then with a weak currency as well, that is helping the FTSE 100 because of its international exposure. So that's on one side. For Europe, actually, the story is a little bit more compelling because fundamentally that drop in energy prices has changed the outlook fairly significantly. And on top of that, Europe is going to benefit fairly significantly from China's reopening. So those two factors, and of course, plus the valuation story for Europe, which is also very compelling, is one of the reasons why Europe is becoming one of the favorites for investors this year.
Is that it? I mean, just too cheap to ignore?
It is actually, yes, in a way it is. You know, we've come into this year and you look at the global map, the markets which really stand out as expensive is actually just India and the United States. If you look at UK and Europe, valuations are fairly cheap. And after the very significant falls last year, many investors are saying, look, if they are long-term investors, this is the time to go fishing. So they're looking for the markets which are fairly cheap, where fundamentals, generally speaking, shouldn't be too dire, which is why Europe, to us, does stand out as a potential. The United Kingdom, I same as you, I struggle to get my head around it. I look at it as a long-term investment perspective. It's not particularly attractive because we are expecting the economy to really struggle, not just 2023, but actually beyond as well.
Yeah. Well, history says sometimes when things look the worst, that's when you actually want to be the buyer of stocks. I'm still trying to understand the U.S.'s start to the year, Seema. I mean, listen, it's good news. We got crushed last year. We're up big this year. Do you expect it to continue, or do you think the highs for the U.S. have maybe already been made this year?
So I think it's possible that you could see this market rally that you've seen since the start of the year continue for a little bit longer. And in a way, it does make sense because where we're at the moment is the market is saying, look, we are closer to the end of the Fed tightening cycle than we are to the beginning. And we're yet to see really clear signs of any recession, right? If you just think about the labor market report and how strong that was. But at the moment, what the market is saying is that there's going to be Fed just a few more hikes to come. And then there's going to be fairly significant rate cuts towards the end of the year. And they're also expecting this very Goldilocks soft landing. So we have to wonder how much more upside really is there for the market. And on the other hand, there's considerable downside risk. So at this stage, although this rally could maybe persist a little bit longer, if you're looking at over the longer year, we have to wonder how, it does certainly seem as if the market rally cannot continue. And actually, at some point, there will be declines which could even retest those October lows that we saw last year.